sir, चालू करिए sir.
Yeah, a very good afternoon to all participants present. I am CA Rahul Parikh. I am the regional council member, and I am currently heading the Ethical Standards Board as its chairperson of WIRC. And this is one of the first programs that we are kicking off as a part of our initiative to spread more and more awareness regarding the ethical standards. So before we start off, I would request all of you to come to attention for the ICA motto. So can we have the ICA motto, please?
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you. So we have again welcome back everybody, and we have with us CA Murtuza Kachwala, Chairman WIRC, CA Shweta Jain, Secretary WIRC, and our faculty for today, CA Maitreyee Roy. Today we have a very interesting topic on hand. We are in the midst of now the bank audit season, and so we thought that this would be an apt program to start off with as a series of programs that we intend to launch under the ethical standard boards of WIRC. We are actually launching a monthly series which will be called the Back to the Basics of Code of Ethics. And the intention of the whole series is to spread awareness amongst our members regarding the basic provisions of Code of Ethics, which we sometimes in our day-to-day routine practice seem to ignore, or maybe they'll not deliberately ignore, but maybe fail to appreciate the finer points of the whole aspect, and which can then lead to serious consequences. As all of us are aware, today the regulatory environment, the society expectations, the government expectations are changing vastly, and in this whole arena, the one cannot underscore the importance of ethics and the code of ethics. The focus on independence, the ethical standards that an auditor follows or a chartered accountant follows are now immensely more important and are more under the spotlight than what would have been in the earlier era. So it is hence very essential for us to be very much aware of all the various aspects of code of ethics. And as a part of this, we have, as I said, we are launching a monthly lecture series on code of ethics from WIRC, which will be called Back to the Basics. We'll be taking up case studies, FAQs, and interesting situations which a chartered accountant faces on a day-to-day basis. Today's lecture is one such example where we are covering, ethical issues related to bank assignments. And the focus is that when we are doing bank assignments, there are a lot of issues that one faces, dilemmas, because the bank requirements, the client requirements or something, and sometimes we feel that whether this kind of situation, what would our code of ethics say, whether it is permitted, not permitted. And I assure you, we cannot have a better faculty than Maitreyee on this, because she's prepared. I know I have discussed the content of our presentation. I am sure it will be very helpful to all of us. At the Board of Studies, the Code of Ethics Board of WIRC, we are also launching a monthly video series where we'll be trying to we'll give you short snippet videos of where we may be discussing code, again, FAQs or case studies related to the Code of Ethics. I hope everybody would find those videos useful. Not taking up much more time, I would now like to welcome CM Murtuza Kachwala and request him to give his welcome address.
Thank you, Rahul Bhai. Good afternoon to all the participants. Let me first thank Maitreyee for accepting our invitation and agreeing to share her knowledge with all the participants today. Maitreyee, thank you very much. I also recognize presence of Secretary WIRC Shweta Jain and Chairman of the Ethical Standards Committee at WIRC, C. Rahul Parekh. And I thank Rahul for organizing this program today. Friends, to all the participants, this year the theme at WIRC is LEAP, that is Leap Towards Excellence, Achievement and Development. And the few goals which we set out for ourselves, one is for a practicing chartered accountants, how do we improve opportunities to maximize revenue and bring different revenues or different streams of revenue in the practice area. So although at WIRC, we've been doing a direct tax refresher course. During this year, we are planning multiple other refresher courses on internal audit, valuation, MSME startup, cooperative. And we don't want to do a 2 or 3 hour session where like we hear from 1 year and goes out from the second. We want to have a program of 20 to 30 hours where we can give a little more detailed about the subject and even bring about like practical case studies, how chartered accountants practice, what are the type of clients, what type of assignments they do, what is the type of fees that they get. And if there are any opportunities for empanelment in those practice areas with multiple authorities, then that also will be discussed. So we're starting with one on the accounting standard in the next month, April. But then there will be a lot of these refresher courses which will come. The second goal which we kept at WIRC this year is how can we strengthen our member technologically? And that is where we started a certificate course. And the part 1 is on like data analytics. That is SQL database and coding, writing queries using Python. Okay, so we can use the database solution, you can write the queries and you can do analytics, and that you can implement in whether it is TDA, GST, accounting, internal audit, whatever, and you can run the queries on your own. These are practical hands-on, Friday evening 6 to 8, Saturday evening 6 to 8, and Sunday 10 to 1, virtually with a lot of data being given, software being downloaded on your computer and you being doing the work, and a class of only 30 people. We completed 4 batches, 5th batch is getting launched in the month of April. Part 2 is on the whole of visualization, Tableau, Power BI, etc. Where like how on the basis of the data, how do you make good graphs, charts, diagrams and present to your clients in various presentations. And we are also launching a part 3 now, which will be automation. So like I'm sure the future accountants are not going to put the accounting entries. And in many organizations, you must be knowing that the purchase invoice gets scanned and the automatic accounting entries get posted, at least for the purchase now. But then using a robotic process automation, RPA and various other technologies, bank reconciliations are getting automated, debtors, creditors, reconciliation, closing balance breakup, confirmations being sent through software. So there are so many things which are happening on through various automation, and not only in finance, but also in the business operations. So the part 3 is going to cover hands-on utilization of RPA tools and other tools which can help in automation, not only in our offices, but also we can go and help our clients in improving the processes, bringing efficiency in their processes as well. So that is one. But other than that, we are also trying to create some small utilities which will be available to the chartered accountants to be used free of cost. And we will be putting them up in WIRC website, and we'll also send a mail and the link of the utilities to all the members through bulk mail. And we are also talking to certain vendors for tying up for various IT softwares which will be available to our members at a very, very economical rate when we compare to the market rate. So there are multiple things which are being planned. Let me take a few seconds on today's topic. I think the 2 alphabet chartered accountants brings a lot of responsibility on us. And now with the increasing scrutiny of the regulators, I think it becomes a lot more important for us to ensure that while we do our assignments, our audit, our assurance work, we ensure that we comply with all the ethical standards which have been laid down and in the regulation. And I'm sure Maitreyee is going to cover a lot of them in detail today, and particularly those which are we need to take care of while we are doing bank audits, because Rahul has planned in specially for the bank audits. But other than the ethical standards, we are also talking about auditing and assurance standards, and we are planning some longer duration programs on that as well. So and while we are on the bank audit topic today, I want to only touch upon a few of the essays in terms of accepting an engagement letter, giving a management representation letter, doing a report properly, and discussing with the management. But other than that, even selecting of sampling on a statistical sampling method, keeping the working papers properly, keeping the documentation properly, and of course, in banks also now, while selecting the sample and looking at the population, if you can do analytic procedures. So friends, there is so much of responsibility, and I'm sure today's session is going to be a good learning. So happy learning to all of you, and thank you, Maitreyee, once again, and over to Rahul. Rahul, over to you.
Thank you.
Thank you.
Thank you, sir. So now let me go to the pleasant task of introducing our today's faculty. So Maitreyee Roy is a practicing chartered accountant, a certified fraud examiner, an independent director with more than 15 years of experience in audit, internal control, system reviews, control risk, and fraud investigations, money laundering, and a variety of other fields. She has been a special invitee to the ethical standard boards of ICAI for the year 2021, and she was a member of FRRB of ICAI and a co-opted member of ethical standard boards in 21-22. She, other than her professional pursuit, she is an avid marathon runner and loves reading, tracking. So she is as one can see, she is a very varied personality. And I'm sure we'll have a lot of things to learn from her. So I welcome Maitreyee Roy, CA Maitreyee Roy, to this session, and I'll now request you to kindly take up your session. Thank you.
Yeah, thank you so much, sir. Thank you, Murtaza sir. Thank you, Shweta ma'am. Thank you, Rahul sir, giving me this opportunity. Thank you all participants to come here and hear to me. I'm very much obliged and I have immense gratitude to you. So with your good wishes, let me start this topic. Today, our topic is very, very interesting. Ethical issues during bank assignment. So we all know that banking is such a segment, which is actually an emerging segment of our industry. So being a banker, they have some of their responsibilities, and be a auditor of the bank, we have our responsibilities. So let us start. To be very frank, because of the complexity and dynamism of the global business, our responsibility has immense now. We need to be empowered differently and very specifically, and have to comply the ethical requirements, as just Murtaza sir told, that regulatory aspect to us now increasing day by day. So we need to enhance our quality, transparency standard to increase our quality and accountability to the service. And here the ethics comes to play, because as a partner of nation building, we need to contribute to the stakeholders' trust. Today's topic I divided in this category. First, we will discuss a little bit about economic dynamics of current scenarios, then banking industry, then different type of topic in a bank audit, significant risk in a bank, compliance with different standard, overview, then what is the effective reporting as expected from us, from the regulators and the client, issues faces during the bank audit, code of ethics, role of code of ethics there, and question answer, and few case laws as per code of ethics of ICAI, and I give the resources and link for the same. If we see the current economic scenario, we all know that we are a growing economy. We are contributing year-to-year basis, which is 7.3% and 2.0% on monthly basis in January 2022 itself. Further, we are developing. And if you study the economic report of Government of India, you will see that service sector, especially banking and finance, actually growing. It was expected that during COVID, it may not perform well, but that is not the scenario. It is growing economy, and banking sector also growing rapidly with that. Today, actually, what we're standing, our banking industry is having robust demand. Because of only our major population is a young population. Because of young population, the youngsters, they are more dependent on the banking rather than the conventional way of finance. Then innovation of service. Day by day, our banking service getting innovated, and a lot of new service has been introduced, and new innovation, new technology introducing here. Our business fundamental in the banking industry also getting changed. We are launching mobile banking, other apps, UPI, BHIM, all these things are coming. With that, we have good policy support from RBI, SEBI, wherever required, even from ICAI, we have good policy support. That is a very big advantage in India in the banking sector. Again, if you go to the economic study, you will see actually NPA has been reduced. If you see the scenario, what was in 2018, 2017, the level of NPA and all that, what we as an Indian intrinsic used to deal, now it is comes little bit slower. So we are doing good. As of now, there are 75 digital banking unit has been promised to introduce by our honorary government. Then central bank driven digital currency is also coming. RBI launches various kind of UPI for future phones. If we see overall banking scenario, woman borrower has been increased. If you compare 2-3 years back, the scenario is again bank credit increased, also deposit. So in a whole scenario, it is a very happening, and we are now dealing with a happening and ever growing portfolio as we are a citizen of India. Now to come to our role as an auditor, we deal with 3 types of audit. One is internal audit, which is in-house. Most of the cases which is involved in-house by their own staff. External audit undertaken by us, like external auditor, chartered accountant, company secretary for the corporate governance audit. And there is another kind of audit taken by regulator, that is NSDL, CDSL, RBI, SEBI. These 3 different type of audit is majorly playing major role in banking industries now. So doing any kind of audit, there are risks associated with the audit. So what are the risks? There are some risks I have written down, jotted down, that is credit risk, market risk, operational risk, but again, concentration risk, interest rate risk, but each and every risk has its own merit. This risk depend on the market size of the bank, depend on the business of the bank, depend on the strategy of the bank. See, the operational risk of a small finance bank never be same as the operational risk of a foreign bank. Similarly, operational risk of an investment banker is different from what is in a public sector bank. Similarly, compliance risk definitely different from if you say the types of bank. Market risk also playing the same thing. Similar way, reputational risk, pension obligation risk, strategic risk, all are different. Now, dealing with the different risks, we need different type of assessment. We all know that there are 4 major principles in managing the risk. That is ATMA: avoid, transfer, mitigate, accept. So we need to identify the risk to understand which are the risks actually is affecting the bank as a client. Then analyze the risk, evaluate risk register, ranking the risk register, treat that risk in a proper way, whether to mitigate, whether to accept, how much to accept, what is the benchmark. comes here. Then monitor and review the risk accordingly. So what is the role in all this risk, growing economy? What is the role? Our role is immense. We all know that as an auditor, we are the independent assurance provider to the organization regarding the various kind of risk management, governance, internal control process, whether they are working properly, gap hai kya, operational capacity, operational efficiency, and this efficiency we have to give in our report. So audit, being a statutory audit or an internal audit, whatever, is an independent expression of our view, irrespective of the size of legal form, whether it is the task is that whether it is producing any misleading information or not. That is the very big responsibility given to us. Being an auditor, it is an independent assurance to the board and audit committee. We need to adequately cover the matter of regulated interest. Similarly, independent access to the effectiveness and efficiency of the internal control also we need to comment. Governance system, process created by the business unit, whether the support functions are proper or not, that everywhere we need to give our comment and we need to say whether it is before giving an assurance that whether there is any loophole or there is any shift from the fundamental principle of the audit. As a statutory auditor, generally our scope is on this 4: audit of financial statement and comment upon the true and fair view of the financial statement, then long-form audit report, certification, and internal control system. The scope of a concurrent audit, if we say, it is a huge. The main role of the concurrent auditor is that they are acting as a supplement to the efforts of the bank, and they are carrying out the simultaneous internal audit checks of the transactions and other verification and compliance. All internal control guidelines, circular, even RBI circular, SEBI circular are need to be referred on ongoing basis to see whether the effort carrying by the bank is proper or is in the line with the regulator. So if you see the scope of concurrent audit, it is really vast. It is included fraud-prone areas, handling cash, then overdue bills, KYC, PMLA, compliance, exercise of discretionary powers, sundry and suspense accounts, then interbranch reconciliation, ATM claims, then recovery, again, restructuring, compromise, all are generally a part of the concurrent audit. As per RBI circular, now, what are the scope of the concurrent auditor will going to be decided by the bank itself, by bank internal auditor. And it is a risk-based auditing. RBI suggested to be a risk-based auditing for the concurrent auditor. Scope of other audit, be it is a stock audit or it is a revenue audit, forensic or SNAP audit, whatever, is depend on the client itself and his requirement. So it is majorly depend on the risk faced by the bank. What is the role of internal auditor there? What they want us to do as an external auditor, and vulnerability and threats applicable to that specific industry and that specific bank. Now, whatever be the role and responsibility, when we are doing audit, there are 5 basic principles we all are governed. That is integrity, objectivity, competency, professional competence, and professional behavior. So integrity, objectivity, then professional competence, professional behavior, and confidentiality is the 5 basic principles, whatever audit may be. As a CA, we need to be honest, we need to be object-oriented, we need to keep our client information confidential, we should equip ourselves with professional competence, and our behavior should be very much well well, and we should use professional skepticism and unbiased opinion wherever required. So this 5 principles govern every type of audit. By doing this audit and how to comply with this professional, this 5 basic principles of audit through the compliance of various standard and guidance note and RBI circular issued to us. So for an effective audit, typically we want compliance with the standard, compliance with the guidance note, accounting standard, and compliance with the various rules and regulations and master directions issued to us by the regulators. We all know that auditing standard is a form of current best practices application for the audit engagement. Accounting standard issued for the uniform standard maintained for the preparation of the financial statement, generally using Indian GAAP. Auditing standard give us the minimum level of technical proficiency our audit assignment want from us to assure that our work done in the high level of quality of auditing, and at the same time providing us also assurance, and so that we can also provide a high level of assurance to the client. Guidance note provide us a detailed guidance of various aspects of auditing. We all know that RBI act as a regulator, so they are giving us a lot of master circulars, master directions for all over the India, for cooperative sector, for commercial bank, local area bank, and to the basic intention is to monitor, and for monitor for their monitoring purpose, for the supervision purpose, we need to adhere to this circulars and regulation so that RBI come to understand that what is exactly going inside. Here is the importance of the regulators here, and we are actually working as a counterpart of the regulator. Similarly, we all know that compliance with the accounting standard is made mandatory by Section 211, subsection 3A by Companies Amendment Act 1999. Auditing standards are also mandatory, followed by as per the guidelines issued by the Council of ICAI. Again, Section 149(3) of the Companies Act requires every auditor to comply with the accounting standard. Reserve Bank also empowered under Banking Regulation Act to conduct the inspection of the bank and regulate them in the interest of the banking system, banking policy, and depositors and public. So when Reserve Bank doing the inspection of the bank, we are also somehow responsible because we need to give report as per the regulation and circular of the RBI. So here, why it is significant to external auditor like us? That is the reason. Reserve Bank is authorized to issue direct, so you all know, under Section 21 of the Banking Regulation Act. Why? For the interest of the depositor, member, or bank for as a whole, or for the banking policy. These directions are mostly pertinent to the advances and deposit of the bank. Intention is to make a healthy financial bank. As of now, we have 29 accounting standards, 34 master directions, master circular, 54 master directions, auditing standard issued by RBI, guidance note issued by ICAI, internal audit standard issued by ICAI, and directions of Banking Regulation Act. All this are applicable to us as an auditor, and we need to understand and apply wherever it is required in our audit assignment. And from here, actually, it started our topic, that where are the issues are coming. As an auditor, we have enormous responsibility because of all this are applicable to us, and regulator or audit client, moreover government and stakeholder all are expecting and counting on us. We need to adhere to the best possible practice to give them a concrete assurance which is free from any materiality as much as possible and prepared with the integrity. So this is our responsibility, which in a nutshell, that we have to address to this circular. And apart from that, for tax audit also we need to adhere to the Income Tax Act. For GST also, GST Act. Then SEBI, I didn't mention that also is applicable to us as an auditor. We need to comment on that, and our report also need to adhere to this principle, this all act and regulations. Now come effective reporting. Illustratively, if we see, it is not a list which is exhaustive. I just picked a few which is more important. As a bank auditor, what we need to report? We get statutory audit report, long form audit report on or comment on internal financial control, other audit report as per the requirement, like internal audit control, internal audit report, concurrent audit report, stock audit report, revenue audit report, depository participant report, sometimes forensic audit report, some area or internal accounts, audit of internal accounts, then ICAP audit, like all this type of audit report, whatever comes to us, means whatever has been offered by the bank to us, and certifications, different type of certification we need to give. These are the illustrative list. Maybe in real cases, we need to give some more during the for the bank as they ask from us. The interesting fact, what is the thing? This reporting of the financial statement of the bank is as per the format of Schedule 3 of the Banking Regulation Act. Audit and certificate is different. Audit report is a reasonable assurance and a certificate is an absolute assurance. That is the reason actually, even after giving audit report, we need to sign so many of certificate to give an absolute assurance. So ethical issues is not only limited to the audit report, it covers certificate also. So any misstatement in the certificate also come under the purview of ethical mismanagement. What are the general objective of audit reporting? Means giving certificate and all that. That we want information about the reporting authorities, economic resources, claims against the entity, any changes in the entity, and the claims of the entity as a statutory auditor basically, or sometimes internal auditor or control auditor also. Then qualitative characteristic of useful financial information. Then proper information to the reporting authority, recognition and recognition of revenues, measurement and materiality of the information, relevance of the information, faithful representation of the facts, figures, and proper presentation of the financial information and proper disclosure as per the accounting standard and other various guidelines. So these are the general objective of our audit reporting. Whatever be it is a certificate, or it is an internal audit, or it is a concurrent audit, external audit, these 4 or 5 are the expectation from us. Now, financial statement, if we talk as a in a shoes of a stat auditor, what is the expectation? Financial statement must disclose the significant accounting policies adopted, applied. The accounting policy, whichever is adopted, applied, must be consistent with the applicable financial reporting framework. Accounting estimate need to be proper and reasonable. Then information presented to the financial statement is relevant, reliable, comparable, and understandable, so that the stakeholder who are using this financial statement should understand that what is the usefulness. That financial statement also need to give the adequate disclosure as actually guided by various accounting standard and auditing standard. Again, very clear mission is to understand that effect of material transactions and the event which may occur or occurred, if, and whether that event has any materiality on the financial statement, and whether they have anything which are not as per the status, rule, or regulation. And last is the terminology used in making the financial statement. It's very important. In the financial statement, this all are need to be covered properly. When we say the financial statement, we always think to enhance the quality of relevant disclosure required by the accounting standard. Very important to adhere to the accounting standard, whereby important and sufficient information. So if you go to the 29 accounting standard, only intention is that we should give the proper disclosure in various financial and financial information which we deal with during the audit. So as I told, that goal is very clear, is to support the decision making, because our decisions, our assurance may help the stakeholders buying, selling, holding equities, debt securities, structuring of the company, maybe settlement of the loan under various kinds. So the immense responsibility to the society itself. Now we come to our topic. Our topic today is the issue faced during bank audit or bank assignment. What is the illustrative overview of that? Say, bank is a very vast area. Each and every place where we start audit, we face an issue. Be it is a cash, be it is an advance, be it is an internal accounts, suspend account, even the day-to-day functioning of a branch, day-to-day functioning of a bank system. Everywhere we face issues and we have to deal with that. Nowadays, because the immense pressure from the regulator, again, immense expectation from the public at a large, government, we are carrying our responsibility. Whatever is issues we are facing, we need to deal not only as per the financial prospect or auditing prospect, we need to deal in a larger view. We need to understand what are the ethical issues in this, whether any of my action has been caught under any disciplinary actions, or I am falling in any ethical violations. So we will discuss, we will discuss all these things in this issue. I tried to cover majorly all, but couldn't able to cover all because of the timing. So let's see and discuss it. Conducting audit and forming your opinion, as I told, is not always well ordered. We really need to fight to get proper information, explanation, document everything. What is important? What analysis is important? Whenever we go to any audit, we need to understand what is my strength, again my weakness and strength में मेरी opportunity क्या थी, and which are the traits which may affect my strength and my opportunities. If we don't analyze this if we don't analyze this four, then we are not able to plan our audit in a very wise way. So it is important. Now, what may be the illustrated divergence in a bank audit assignment from a statutory audit point of view? Non-disclosure of all significant accounting policy adopted in preparation and presentations of financial statement, non-compliance of accounting standard 1, para 24. So as per the AS1 para 24, as a statutory auditor, I need to disclose all the significant accounting policies adopted in the preparation and presentation, and I have not disclosed the same in the notes to accounts. It is a divergence majorly noticed in a statutory audit. Again, AS3 para 14, non-classification of loan made and repayment thereof under cash flow from operating activities. Mostly it is classified under cash flow from financial activities. In a bank, in a bank, loan is our operational activities. So if we classified in a financial activity without having proper documentation and information, see, it can be a financial activity, but we need to understand that what are the scenario and circumstances, and we need to give a disclosure according to that. So if we are not taking it as in our operating activities and we are taking it under financial activities, we need to give a clear disclosure for that. And if we don't give it, again, non-compliance of AS 3 para 14. It is a divergence. AS 4 para 9.2. Nature of contingent loss arising from the event occurring after balance sheet date has not been disclosed, but estimate of the financial effect has not been disclosed. See, the cases here that there is some legal case happening on some branches or some bank, or there is some BG, which may, there is a dispute in a BG, in a financial BG or performance BG. And for that, again, some legal cases has been going on, or there may be some income tax cases going on. So it is an event occurring after balance sheet date. There may or may not be contingent loss arising from that, but we have disclosed the same, that see, this is there is a case going on, there's a dispute in any BG. We have mentioned that, but we failed to mention the estimate of the financial effect, means quantification basically. So that is also a divergence, and it is very common divergence, and it is noticed in statutory audit of bank. Short provision of bonus, provision for income tax relating to earlier years, investment write-off, directly adjusted to the reserve and surplus. This item need to be recognized in statement of profit and loss account. Non-compliance of AS 5 para number 5. It should not be directly adjusted to the reserve, right? It need to be treated in profit and loss account. So again, it is a illustrated divergence in a bank audit assignment. Then extraordinary item disclosed in operating cash flows, but not disclosed in profit and loss account. Non-compliance of AS 5 para number 8. Any extraordinary items, any sale of fixed asset, or means which is extra, not fixed asset, I will not tell specifically, anything which is extraordinary, which increase or decrease cash flow, whatever, need to be recognized in profit and loss statement, and proper disclosure need to be given in the notes to accounts. That is not done. Then circumstances where revenue recognition has been postponed pending the resolution of significant uncertainty. A very important disclosure of accounting standard 9, para 9.2 and 12. See, if there is any case against any borrower and that is pending in NCLT, or there is any other process going on to a borrower, and for that my revenue, my fees as a banker is delayed, I need to disclose the same in my notes to accounts in a proper way. So if not, again, it is a divergence. Whenever there is a revaluation of an asset, entire class need to be revaluated. Suppose I'm not revaluated the entire class as a management. So as an auditor, my duty is that what is the basic of selection of the certain class of asset for revaluation need to be disclosed in the financial report, means to the notes of accounts. If not, it is a divergence under accounting standard 10 para 8. Accounting policy relating to the various employee benefit are disclosed as per accounting AS 15. Again, what is the divergence here? You know, the divergence here is that whether it is a defined benefit or non-defined benefit, the nature of the benefit is not disclosed. And again, it is a must requirement of RBI. And it is a non-compliance of AS 15 para number 120. segment reporting. We all know that in all type of business, in a bank, we need to do segment reporting as per AS 17. Bank geographical segment, then in the territorial wise segment, or the nature of the business like treasury, then operations, and all this type of segment we need to give our reporting. So suppose investment and advance, can we show it in a same reportable segment? Because the investment and advance both have different risk categories. So I cannot tell that investment as my regular cannot be classified in regular segment, and advances cannot be classified under treasury operation. Because the risk is not associated with this is not the same. So if I shown investment and advances both under treasury operation in my segment reporting, it is a non-compliance of AS 17. It cannot be reported in a single reportable segment. Again, remuneration paid to the key management personnel under related party disclosure. Very important disclosure under AS 18 para number 23. In lot of cases, it has been observed that only a reference note has been put in the disclosure that remuneration has been paid to Mr. X, Y, whatever, as a related party of the bank. He's holding a position of this. But we need to also give in the disclosure the amount. And it has been noticed that it is not given. Only a note has been provided that remuneration paid to Mr. X, but what was the amount of remuneration and the other benefits, it is not given. Again, a non-compliance of accounting standard and divergent. Uniform accounting policy need to be followed in preparing consolidated accounting statement. It is very important for the central statutory auditor when we are consolidating different branches and in our financial statement. So here, when we are consolidating, we need to give the proportional item where different accounting policy has been applied. Suppose in some areas, I'm giving a very basic example. We are not using WDV as method for depreciation. We are using some other method, maybe whatever straight line method. So we need to write in the note during in uniform account under uniform accounting policies that for this much item, our depreciation policy is different. We are applying straight line method for this amount, and for rest we are applying WDV method. Even suppose we are valuing investment in a certain way, somewhere in FIFO, somewhere in LIFO, whatever. If during consolidation we come to understand that suppose some amount of investment is not valued in FIFO, which is my uniform accounting policy in a bank, in the bank where I am auditing, I need to write as an auditor in the disclosure that for this amount of investment or security, the accounting policy is different. Similarly, we need to write for revenue recognition also for this amount of loan or this amount of portfolio, revenue recognition is like this, and for it is like this if there is uniformity not maintained. If not, we are come under the non-compliance of AS 21 para 20. Then non-deduction of DTA from Tier 1 capital. For CRAR calculations and for Basel III reporting, it is a very important. Creation of DTA result Tier 1 capital increase, but there is no increase in a tangible asset being added to the bank balance sheet because the nature of DTA is not a tangible. So terms of the instruction of capital adequacy, DTA, which is an intangible asset, should be deducted from Tier 1 capital. So if we don't deduct DTA, it is result in increase in creation of increase in Tier 1 without any increase in the tangible asset of the bank. So it is giving a wrong CRAR for the bank, and similarly the reporting is wrong. It is also a non-compliance. The equity method of accounting not followed for investment in associate, although it does not fall under the exceptional category. There are some exceptional categories that investment acquired for immediate selling, or investment acquired in some special categories. They are exempted in under this method of accounting, but if it is not fall under exceptional category, then we need to account that investment under equity method. If we don't, we need to give the disclosure properly that why don't we did, or whether it is fall under exceptional categories or not. Then again, non-disclosure regarding the amount of net cash flow attributed to operating investment and financial activity of discontinued operation during the current financial year, during the reporting period. So our reporting period basically 1st April to 31st March. Now any discontinued operation, if suppose bank stop any operation, then we need to disclose net cash flow attributable to operating investment and financial activity of that discontinuing operation also in the financial statement. Non-disclosure is a non-compliance. And it is one of the major non-compliance happening in reporting of bank audit assignment. Then again, floating provisions. We need to write how much is the floating provision in the notes to accounts, in the advances and others, in the credit risk analysis. If we not write that properly in a quantitative and manner, it is a divergence. We need to write exact amount of floating provisions considered by the bank during the reporting year. Then non-disclosure of the total eligible amount of HO borrowing in the balance sheet under the head just upper Tier 2 capital raised in the form of head office borrowing in foreign currency. It is also very important that we need to give a disclosure that what is the HO borrowing in foreign currencies. Again, it is a non-disclosures happening by some of auditor, and it is a divergence. Non-disclosure of movement of provisions held towards the depreciation of investment. If we move any provision under investment, we need to give a proper disclosure that why and how much we have moved and what is the reason of that movement. If don't we give, then it is a divergence under accounting standard and under the regulatory method. Valuation decrease of repo, SRL, non-SRL derivative security. We need to clearly mention that under repo, SRL, non-SRL derivative securities, what are the valuation decrease, increase? If we don't give this disclosure, we are caught under non-compliance of RBI circular. Obviously, accounting standard also we will caught under that. Then risk management policy of the derivative, that how we are managing risk in the derivative, that has to be disclosed in the financial in the notes to accounts and in the audit report. If don't disclose that, it is again a divergence. Asset quality, extremely important. NPA is a major concern for the bank. So we need to disclose the asset quality as per the prudential norms, as per the master circular given by the RBI, as per the norms given by the RBI. Similarly, restructuring of the account. How much account has been restructured? How much account the amount have been restructured? The provisions thereof. If any write-off, any increase and decrease needs to be disclosed in a proper way. Assets sold under securitizations, very important. We need to disclose the same in the audit assignment, in our audit report. Any short provisions of NPA is a big divergence, a big cut for us. Short provisions of NPA is a material misstatement in a bank audit. If we not disclose the NPA asset purchase, again, it is a serious mistake as per the regulator. We need to be very focused on that provisions of NPA should be proper. Non-disclosure of the NPA asset has been purchased, whether there is any such a scenario happening in our audit report or not, whether we are able to report all the thing properly, whether there is any mistake here. Wrong bucketing of advances, deposit under asset liability management. 0 to 7 days, 7 to 14 days, 14 to 30 days, this bucketing, we need to be proper to understand that what is the high quality liquid asset the bank is maintaining. And it is helping to understand the CRR and SLR of the bank, NDTL of the bank. Form 8 of the bank, Form 8 reporting of the bank depend on that. So wrong bucketing under ALM is a serious concern, it's a divergence. Non-disclosure of exposure to a real estate sector, capital market, country-wise risk exposure. Real estate is very highly risky area, similar to the capital market, and obviously country-wise risk. It is why it is important because now we all know what is the Ukraine-Russia crisis going on. So the disclosure and the risk rating of these countries has been increased. So if we and similarly for COVID now is a surge in China. So now we understand that if we have any exposure in all these countries, whether my risk is same what I am having in India or I am having in a country, let's say whatever country, all countries are now in trouble, but suppose in India or say in Dubai or whatever in a good note. So our exposure limit is different from different countries. So this disclosure is really important for in the view of the stakeholders to understand that where the asset of the bank, where the exposure of the bank is located and what is the risk associated with that exposure. If we don't disclose it properly as an auditor, it is a divergence for us. Non-disclosure about single large borrower and group large borrower. As per RBI circular, we need to maintain a cap, 25% is the cap. So we need to give a disclose that this is the single large borrower and this is the group large borrower, and there is a return going to the RBI for that. So if we don't disclose it properly and there is a mistake in the disclosure, again, in the similar way, there is a mistake in issuing certificate of SBL and JBL. It is a divergence in the bank audit assignment. It is a divergence. Non-unsecured advances, very important from a securitization prospect. There should not be any unsecured advances, correct? And if also, we need to understand how much it is consist of the bank book. What is the risk? How they are taking and dealing it in CRAR? How much risk is associated to them? So if we come to understand anything about unsecured advances, which is going beyond to the limit prescribed by our regulator, which for suppose there is some unsecured advances which is in such a group, which is given in such a group or the borrower category, which is exceeding that SBL GPL norms, we need to give a proper disclosure of that, because unsecured advances have high risk of failure, and our stakeholder have right to understand what is the scenario is going on, what is the reason behind that, and what is the risk of them. So it is again a divergence if not disclosed properly. Penalty. I just before slide I discussed the reputational risk and on all that. Penalty is one sort of reputational risk if it is imposed to be very frank. Bank or financial institution have not done certain thing as per the regulation norms. That is the reason penalty imposed. So we need to understand in such a in this area that if the penalty imposed, what was the reason, what was the loophole, what was the gap, whether bank has taken any step to maintain to modify the gap or to cover the gap, or it is the same way. Suppose there is a penalty imposed to a bank for non adherence to the RBI regulation on advance. Now, as an auditor, our duty is to see that whatever has been imposed, these 2-3 points, what the points RBI told that you didn't adhere to that point, that is the reason penalty लगा है आपको. मैंने देखा तो एज अ ऑडिटर मेरी रिस्पॉन्सिबिलिटी वही बनती है कि वो जो 3-4 पॉइंट थी वो अभी भी चालू है, और whether how much initiative bank to take to cover up this gap. अगर नहीं हुआ है, मेरी reporting pattern, how it has got affected for that, how much materiality is associated with that, whether reputation of the bank is in toss for that, उसका risk क्या था, फिर इस register में उसका assessment कैसे हो रहा है, that all comes. Again, divergence in credit portfolio, very important. See, like just I discussed the real estate sector in some countries which is in turmoil. Now suppose I have my major portfolio, credit portfolio in real estate sector of that particular country where is a turmoil going on. Then I need to take care of that with the current economic scenario, with the professional skepticism, and obviously with the regulation and directions given by the regulator. If there is any divergence of that we are not properly applying our accounting standard, auditing standard, or regulator requirement, then it is a big misdisclosure as a part of the auditor. So credit portfolio, similarly, in the credit portfolio, we need to see how much is the credit concentration risk with against single large borrower, group large borrower, where is my concentration happening, whether diversification is proper or not, what is the diversified portfolio bank is maintaining, where the area bank is giving loan, secured hai kya, secured hai to Surface Act properly adherence kari hai kya. So this all are the part of credit portfolio that need to be understood. Similarly, in credit, a major part played by trade finance. In trade finance, packaging credit, post-shipment credit, pre-shipment credit, how they are managing? Do they have any tendencies? Do the audit team, means client, have any tendencies to do any kind of I will tell not misstatement, misuse of the credit facility? Do they have any system gripping so that they can change the borrowing pattern, they can change the EMI pattern, they can change a pre-shipment portfolio to a post-shipment portfolio? This all come under credit portfolio management, and we need to give a very clear cut and strong report and disclosure under this. Any divergence come under a very serious ethical ground. Non-compliance with the regulator, not reporting of the regulators what they are asking for. Regulator, there are what just I discussed with you that there are a lot of master circular and master direction 34 and 34 master RBI master circular as on date applicable to bank audit, 54 master directions applicable to us as an auditor. We need to see that. So we need to see whether the auditee, the client, have any non-compliance to the regulator, like they didn't give any certain reporting, or they give any certificate beyond certain time, or there is some information asked not given by the bank, or bank don't have that information in the structure given by the regulator, that all come under this. And we need to give a disclosure for that. We need to write it down in our report in a proper manner. We need to qualify our report in proper manner. And if we are not doing that, we come under the non-compliance of this particular area, and it is a divergence. Then a very big issue is the wrong figure written in certificate. When we are reporting something, as I just discussed, a certificate is an absolute assurance. So if I write a wrong figure in the certificate, I am caught as giving wrong information. It is a very big divergence. It is a very big ethical mistake. Priority sector, NBC, is very emerging sector and very important thing. So for calculation of NBC priority sector limit, if there is any wrong calculation, then we can calculate wrong the priority sector limit. Then again, provisions and all that may be wrong. So it is a very important thing, and any wrong calculation is an ethical divergence. Non-provisioning of aged balances, suspense, whether it is a liability or asset. If we need to do a provisions for any unreconciled balance, if the suspense account and interbank account, and if not done, it is a divergence, and we need to report accordingly, and we need to deal the same in our financial statement accordingly. Nostro account for the foreign banks and for the big public sector bank also, for standard statutory auditors. If there is unreconciled debit and credit lying in the Nostro account, unexplained, then proper disclosure need to be given as an auditor, because here also we have risk, because we don't know what is the reason of the unreconciliation, whether it's a wrong entry, wrong placement, or any system loopholes. So any divergence, again, caught under ethical mistake. Wrong certification about IT environment and risk. See, as an auditor, be a concurrent auditor, internal auditor, or statutory auditor, we need to give our assurance about the IT environment and risk associated thereof. Ghosh and Jilani committee report we signed, correct? So we in that report, there is even Barman committee report. There we need to comment on the day-to-day operations of the bank, the IT structure of the bank. So if there is some risk associated with and we certified, then it is an ethical mistake, and because we couldn't able to identify the gaps, what happened, and how the gap is vulnerable to the system, and how a system can be compromised for the gap. So being a auditor, we need to understand that IT environment properly, and any misuse of IT environment, any potential misuse of IT environment, any risk associated with the IT environment should be reported. Again, another very big important thing is that data quality and gaps. We all come across this situation. If you go to the accounting master, if you go to the loan master, if you go to the customer master, you will see that there are a lot of field is not fill up, or there is wrong data has been put it in the system, or wrong maturity period has been put it in the system, wrong name, wrong address, wrong phone number. If data is wrong, data quality is poor, then the MIS generated will also be poor. We couldn't able to get the proper MIS, we couldn't able to get the proper exception report. So then how we understand the gap? Because as an auditor, we also majorly depend on the reports generated by the bank, correct? So if there is a gap in the data quality, data sanity itself, If the data, if the borrowing pattern, if the borrowing amount is wrong, if the EMI schedule is wrong, if the advances pattern is wrong, category is wrong, if the customer name is wrong, if the KYC is not there, then how we can rely on that report? And we need to give a very strong comment on that the data quality is wrong and there is gap involved. If we are not reporting or we are not dealing with that as an auditor, it is a divergence as an auditor. Again, cash and security is not valid. Cash and security is a high risk area. So we need to, when as a competent auditor and as a statutory auditor, whenever we are writing something in our report, we need to be tallied. And if we don't tally it, we need to write that this has been tallied and this not to be tallied, the reason thereof, or whatever in our LFR or competent audit report, the reason thereof. Not tallied, I wrote something, it comes under the ethical issues as an auditor. Proper documentation and reconciliation of trade finance and advance, not available in the bank, but not reported. It is a very common circumstances that we don't have proper documentation. Documentation मिली है तो reconciliation नहीं है. How many BGs are going to expire during the month? Expire BG है तो उसका पैसा आया है कि नहीं? Then how many LCs are going to expire this month? Whether limit has been set properly or not? हाउसिंग लोन है तो उसका प्रॉपर वेरिफिकेशन हुआ है क्या? उसका डॉक्यूमेंट चेक हुआ है क्या? उसका डॉक्यूमेंट में अगर कुछ नहीं है उसके लिए डिड आई आस्क for the document? Similarly for KYC, KYC, video KYC, सरसाई में सरसाई नहीं हुआ है borrower का. All this comes under this. So if we come to understand any of such situation, proper reporting has to be done here. If not done, then it is an ethical issue. NP automation. Now, as per recent RBI circular, NP automation has to be done by the bank by, I think, by May of 2022. There are a lot of financial institutions, they are in the process of doing NP automation. We need to modify our report accordingly. That NP automation done, not done. If not done, reason. If done, if any loopholes or gaps we observed, it need to be properly disclosed in our report. Not disclosed, it is a divergence. Non-evaluation of STR, CTR. See, STR, CTR is very big in the big concept from PMLA point of view. So if we come to understand anything which is abnormal, which has caught our attention, we need to be very cautious in that, and we need to modify our report accordingly. If there is any gap in STR or CTR, if it is, we saw that if something is coming in STR but not catching in CTR, then we need to go maybe beyond our a little bit deep. Beyond this, only the report, we need to see the rules set up for STR, CTR. What is the bank perspective? Why it is not coming? Is it intentional or unintentional? All things comes under. And if we don't evaluate the thing and don't report, then it is a divergence. Because it is such a thing that on the basis of that we can actually understand so many things: fraud, money mule, AML, then combating terrorism, and moreover the PML Act majorly depend on this. As per the Panama Papers, which have been leaked this few months ago, and there is a lot of YouTube news and other news coming that one of our actors has been caught there and all. So now we should understand that what is the importance of this PMLA law? What is the importance of money mule? What is the importance of STR, and why the reporting of STR is so much important to RBI? So we need to be very strict here. Non-reporting of red flags accounts in advance. Not only advance, in any. Red flags for advances, there is already an RBI circular and RBI list that so that is really helpful to us to understand that what are the prospective cases can be, and what are the scenarios can be, so that we can understand the red flags and all that. Now, red flags in advances is one concern, but it is not only the concern. Red flag may be in lot of areas. Red flags may be in day-to-day operation of the bank or branch. Red flag may be say in the housekeeping of the bank. Red flag may be in the attitude of the bank. Red flag may be in the attitude of the employee of the bank. So wherever we understand any red flag, like suppose bank is adopting a new method or a new account CBS, suppose. Now half of the employee don't know how to use that CBS, or proper reconciliation of the old CBS and new CBS has not been done till the date. Don't you think it is a red flag? Then how, as an auditor, I rely, and where I should rely, which system I should rely, how I can take an exception and report, how I can evaluate and report. So red flag doesn't mean only to advance. Red flag means a lot of things. Wherever there is a shift from the normal course, there is a red flag. Because as a bank auditor, I always see bank as me. So as a me, if there is some little bit shift, it is a red flag for me. Similarly, as a person, if we see bank, any shift is a red flag for bank, because that impact the health of the bank. Suppose today I'm feeling very well. If I feel little bit headache, it is a shift from my usual health. So it is a red flag to me. Similarly, if there is a little bit shift of the normal course, which is a normally adopted business without any reason, then our attention need to be caught there. That is a red flag. And tiny thing need to be reported, need to be discussed with the management to understand that why. Again, non-reporting of gaps on AML guidelines and PMLA Act. I just discussed that is the reason why evaluation of STR and CTR is so much important. AML guidelines is something which RBI and Financial Intelligence Unit both are very much strict on that, and they ask for several type of reports, and there are a lot of I definite that there are a lot of my colleagues, they are doing AML audits as per PMLA Act. So they know how much is the important and what are the guidelines need to be followed and what are the rules they need to check. And to be very frank, as an auditor, we come across the rules like basic rules, you know. Suppose the risk category of the customer. Then suppose a customer has been categorized as low risk, but in their account, high value transaction is going on. No, there is no reporting in STR. This all are gaps in AML. Every account has been opened as savings, but the money which is been deposited in regular basis are nature of the business transaction. Again, come under this AML guidelines and PMLA Act. We need to understand the gaps in the system of the bank, gaps in the rules in the system, gap in the risk assessment of the bank, and we need to report accordingly. So this all are how much I try to cover is as illustrative divergences as per my experience. Maybe there are a lot of other things you all faced. If there is any divergence from the normalcy, if there is any shift, that is a divergence, correct? So that divergence need to be analyzed very carefully and on the basis of the rules, regulation, professional skepticism, professional behavior, integrity, objectivity, and objectivity. Otherwise, every chance is that we can caught in ethical issues. Now let us say, what is the role of code of ethics here? As a CA, we have two rules directly applied to us. One is chartered accountant rules. One is code of ethics issued by ICAI. Professional misconduct. What is it? Section 22 of Chartered Accountant Act says the professional or other misconduct shall be deemed to include any act or omission specified in any of the schedule, but nothing in this section shall be construed to limit or abridge in any way the power conferred or duty cast on the director discipline under subsection 1 of section 21 to inquire into the conduct of any member of the institute under any other circumstances. So it is in a nutshell, it is that anything which comes under we are doing, which is not as per the act or omission of any schedule, is a professional misconduct. Code of Ethics 2019, as you all know, is divided in three parts. Part 1 is the adoption of International Ethical Standard Board ISBA Code of Ethics, because CA Institute ICAI is a part of IFAC. IFAC is the international body of financial international body of financial controllers basically. So they are having one board called ISBA. Being a member of ISBA, we are member of IFAC, we automatically come under the code of ethics of ISBA, and that is discussed in part 1. Part 2, CA Act and various clauses and various council guidelines has been discussed in part 2. Part 3 is the case law of the code. So illustrative structure of volume 1 is that part 1 is applicable to all professional accountant. Part 2, professional accountant in service. Part 3, professional accountant in public practice. Then international independence standard discussed in part 4A, 4B. Part 4A, independence for audit and reviews. Part 4B, other assurance engagement like certificate and others, has been discussed as per ISBA Code of Ethics in volume 1. And volume 2, all of you know, it is have CA Act and various other council guidelines. Now, being an auditor, what are the ethical rules applied to us? It's very simple. Integrity, objectivity, professional competency, due care, confidentiality, and professional behavior. So we should be integrate and straightforward, honest, not to compromise our professional judgment, should always maintain the required skill, competent professional services, confidentiality of information shared with us, and comply with the relevant law and regulation and avoid any discredit of profession. So our act should be such that we should not fall anything which actually invite anything which discredit the professions. We are there as a representative of our profession. So these are the ethical rules. In ethical rules, there is a very interesting concept called conceptual framework. It is discussed in section 120. ये क्या है? When we are doing audit, we saw all the divergences, correct? There, we need to apply our conceptual framework to understand whether I am maintaining the fundamental principle of audit or fundamental ethical principle, the integrity, objectivity, confidentiality, due care, professional behavior, and how we come to understand that. Section 120 of Code of Ethics 2019 has set out various application material which with examples you can understand that what is the responsibility, how we can apply our concept, how we can apply our principle, and it is in a wide range of facts and professional activities and interest and relationship that can create a threat when we act as a professional accountant. Conceptual framework approach for the professional accountant have three basic principles. That is the identification of threat for the fundamental audit and accounting principle, evaluation of that threat miller, then how much is the threat, how much is the majority of the threat, how much is affecting my reporting quality, and address the threat either by eliminating or reducing them to an acceptable level. Now, this acceptable level depends on case to case. There is no exact definition of this acceptable level. It is depend on case to case. But our main intention, what I discussed in earlier slide, is that good and proper bias-free reporting. So for doing that, how much is the acceptable level that we need to understand through our professional competency and skepticism and unbiasedness. What is the threats in ethics? There are 5 types of threats we all encounter during our audit assignment. That is this self-interest threat, self-review threat, advocacy, familiarity, and intimidation. What is the self-interest threat? Self-interest threat is such kind of threat that suppose I am a trustee of some trust and I am the auditor of the same trust. So it is a self-interest threat. What is a self-review threat? I am the internal auditor of the particular audit client and also the concurrent auditor of the particular audit client. What is the advocacy threat? My action is such that it is a undue advocacy to my client. This is called the advocacy threat. What is the familiarity threat? That particular audit client with me for a long period of time, and I'm so much familiar with their do's and don'ts and their operations, everything. So they are doing something which is not good as per the regulation, that is a violation of the regulation. But because I'm there for a long period of time, I know that they are doing that, but they are doing it in ethical way. So I'm not reporting that threat, or I'm just not seeing that threat. Or I'm very familiar that a particular method of accounting, the accounting that client is adopting, and which is, I know it is not as per accounting standard, that I know, but I'm familiar for that, and for last 10-15 years I'm familiar. So here the divergence is here and threat is here, because all this type of thing need to be disclosed properly in the audit report. Intimidation threat is that I am so overwhelmed by the client, by their gifts and inducement to me, that I'm not behaving in a professional way. This is called intimidation threat. So these 4 or 5 threats are very, very important in conducting any audit, which we all face that. And we should understand the trait, and we should deal with this trait in such a manner that our trait come to an acceptable level. The risk from this trait we either try to eliminate or bring it down to an acceptable level, so that we no need to compromise with the ethical principle of audit. So here is again another very interesting concept, is the breach in audit and review engagement. What is that? Suppose as an auditor, I went to an audit and I come to understand a breach of ethical principle. then how shall I behave? Very simple. End or suspend the interest or relationship that create the breach and address the consequence of the breach. Suppose suppose I went to I am the auditor of a company and I am also a director of the company. Then I need to end, suspend any one of my duty. Or consider whether the regulator or legal norms apply to the breach, and if so, comply with those requirements. Suppose there is some regulatory requirements is that I need to hold a certain kind of certificate or certain kind of educational qualification for doing certain kind of audit. So I need to adhere to that. If I don't adhere to that, I am a breach of this particular section. A very common example is that having visa or CISA certification, or who are doing the depository audit having certification as prescribed by the NSDL or CDLC. What is the course of action shall be taken by the firm when it identifies breaches in audit and review engagement? Promptly tell this about the breach to the engagement partner, those responsible to the policy and procedures relating to the independence, other relevant personnel of the firm where appropriate or the network, and subject to the independence requirement of section 4A independence standard, who need to take the proper action. So whenever there is a breach, this course of action need to be taken to reduce or eliminate the breach in acceptable level, so that there is no ethical mistake happen in assurance or reporting. Now, what is the action can be taken by the bank in review engagement, in audit and review engagement? Suppose in an audit we saw there are breaches, and we tried to bring down the breaches, or try to bring down in an acceptable level, or try to address the breaches. Then depending on the significance, we need to determine whether to end the audit assignment or not, in a straightforward way. If there is some breaches which as an auditor we able to understand that we cannot reduce it to an acceptable level, breach is still there, then it is it is on our hand, we can end the audit engagement. Wherever possible, take action that satisfactorily address the consequence of the breach, give a proper modified opinion, qualified opinion, and whatever the action is appropriate for the circumstances. Say you can end the engagement, you can give a qualified opinion, you can modify your opinion, or you can go and discuss to the audit client. Let's see, these are the breaches, and try to bring it down to the acceptable level. So these all are the ethical principles under the breach of audit and review engagement. In determining all this thing, whether to end, how to bring it down to an acceptable level, what is the major important thing? Major important thing is that if it was not me, if it was a reasonable and informed third party is seeing this, whether that third party will arrive to the same conclusion what I am arriving. If no, then we need to rethink that how this trait is affecting us. If we say that a reasonable informed third party not able to arrive a proper decision by seeing my report, or by non-disclosing certain fact as an auditor by me, then we should take this matter very seriously and need to modify, qualify whatever way possible our report, or end our engagement, because our responsibility always give an assurance to the stakeholders That is the reason that this concept has come, whether a reasonable or informed third party able to conclude that objectivity of the report, whether they able to understand that whether it is compromised or firm would be unable to issue an audit report, whether they have whether it is showing properly in the report or not. If not, if there is any dilemma, then it needs to be properly addressed, and as an auditor we need to take our decision in that way. Professional accountant like auditor not knowingly associate with the report's written communication or any information, whether as an auditor we believe that it contains materially false and misleading statement, omit or obscure such required information, otherwise it become misleading, contain statement or information provided negligently. It's very important whenever we are doing our reporting, we are guiding by the 5 principles of audit. We have ethical traits. We need to abide by the accounting standard, auditing standard, then Banking Regulation Act, RBI Master Directions, everything. So we need to understand whether whatever information I am getting is hitting any of this provision, is hitting the quality of my report, and if yes, then we need to understand how to treat the breach. I discussed the before slide, whether to end engagement, whether to modify or qualify the report. So now, see, the PA should disassociate himself. It is actually advised that if there is a serious breach is happening, it should modify and it should disassociate himself from the assignment, whatever is the circumstances be. As an auditor, we need to be unbiased, attend and maintain professional knowledge, implement and act diligently. Continuous awareness of the legal, technical, professional standard is very important to avoid any sort of breach. Perform professional duty in timely manner, carefully, thoroughly, so that there should not be any materiality, conflict of the interest. There is no misstatement. Undergo continuous professional development to understand is there is any gap in the knowledge. Appropriate proper training, supervision of the team working under him is very important. It is not only me, it is my team who is doing the work. So we need to understand the competency of the team and provide sound judgment. It is an expectation from us that provide a sound judgment whenever it is required. Professional misconduct, how we know that it has discussed in the CA Act in 4 parts, part 1, part 2, part 3, and part 4. Part 1, professional misconduct by the chartered accountant in practice, it is divided in 12 clauses. In Schedule 1, part 2 clauses are there. It is dealt with the member in service. Part 3, general, it also have 2 clauses, and part 4, other misconduct of the member in general. Similarly, second schedule has 2 parts. Part 1, professional misconduct of the member in practice, 10 clauses are there. Part 2, 4 clauses are there, which is applied to the members in service. Now it is very common question that what are the distinction between this schedule? This is the gravity of the punishment. Second schedule is have more gravity of the punishment compared to the first schedule. So I have picked a few commonly observed professional misconduct during a bank audit assignment. First is that share of fees with non-member. It is clause 2, part 1, first schedule. Entries into partnership with non-members. Clause 4, part 1, first schedule. Fails to communicate with outgoing auditors. It's very important. Lot of disciplinary case has been pending to the institute on this particular thing. This clause 8, part 1, first schedule. We need to communicate with the outgoing partner in a proper manner. Act falsely as FCA. Clause 1, part 3 of first schedule. then being distributed to the profession and institute as a result of his action, his members' action, clause 2, part 4 first schedule. See, we just see in the earlier slide that our action should not bring any discredit to the profession. It should not distribute to the profession. So if we act in certain way, we bring bad name for the institute, we have caught under disciplinary action. Then disclose information acquired without client consent. This come in the clause 1, part 1 of second schedule. Certify and submit report without examining the related records. Wrong reporting. Clause 2, part 1 of second schedule. I write something, some figure in the certificate, and another figure is written in the financials. We caught in the clause 2 in the part 1 of second schedule. Fail to disclose any material fact in the financial statement. What is the disclosure norms which are discussed in the earlier slide? Like DTA, like in A-stain, we need to when there is a revaluation, we need to clearly disclose that this certain class of asset has been evaluated in a separate way. If we fail to disclose all this kind of thing, again, accounting policy adopted. How we reported investment advances in the segment reporting, single segment reporting. We have reported by segment kya hai. We fail to disclose the material fact in the financial statement. It is caught under clause 5, part 1 of second schedule. Fail to report a non-material statement appearing in the financial statement. Clause 6, part 1 of second schedule. Not like what we discuss in AS 18, key management personnel. We fail to report the amount of remuneration, although we have taken the same in our profit and loss account for calculating under the proper head, but we fail to report the same in the notes to account in a proper disclosure. It is got under clause 6, part 1 of second schedule. Perform professional duties without due diligence and grossly negligent. As an auditor, as a concurrent auditor, my duty is to check cash and securities, correct, and give a report for that. Or sensitive items, how it is kept, how much is the cash balances at the end of the day, or CRR, SLR 12 or dates, all I need to check. Now I didn't check, and I reported. Then it is come under clause 7 that I didn't perform my professional duty with due diligence. During COVID time, there are a lot of instances happen that we couldn't able to go to the branch to check the physical cash. But many of us give a proper disclaimer that we couldn't able to go to the branch and we did it electronically. So that type of honest disclosure you need to give, that where I didn't, what I did. If I do anything without having a proper disclosure and without having a due diligence, and then I am a gross negligence of the clause 7. Fail to obtain sufficient information for expressing an opinion. I'm giving an opinion, but I don't have any information for giving that opinion. I'm giving an opinion in under AS5 that the method of calculation of gratuity is something, but I don't have any information for that. I don't have any AS15 report of the actuary. Then it is clause 8, part 1 first schedule will come. Fail to invite attention to any material departure from the generally accepted procedure of audit. Any estimate, anything which is not done as per GAAP need to be reported. If any entity, any borrower having cash-based accounting still, that need to be properly reported, because that is a material departure from the generally accepted procedures of audit. If I don't report that particular area where this type thing is happening. Contravenes any of the provision of the Act, regulation, and guidelines issued by the Council. Council have issued various guidelines. One of the guidelines, just we in the earlier slide we discussed that we need to adopt auditing standard as per the guidelines of the council. So we don't adhere to the account auditing standard, we will caught under the guidelines clause 1 part 2 of the second schedule. If there is if we don't adopted the auditing standard in our audit in a proper way. Then let us discuss some question and answer and case laws of the code. So whether the concurrent auditor of a bank can accept tax audit of the same bank? No. Answer is clear, no, because it cannot be done together. Statutory and internal audit cannot be done together. Whether a member can simultaneously be the information system auditor and credit appraiser of the bank? Yes. A member can simultaneously be the information system auditor and credit appraiser of the same bank, except in case where appointment as information system auditor has been made under a statutory and regulatory requirement. However, he should ensure at his end that there is no conflict of interest. And if there is a conflict of interest, we need to understand the traits, we need to understand the breach, we need to modify or qualify our opinion or end our engagement accordingly. What just I discussed in the earlier slides. Whether a concurrent auditor of a branch of a bank can undertake the assignment of LFR of the same branch? Some point of time, yes, some point of time, no. So if the concurrent auditor of a branch can undertake the assignment of LFR only with respect of the branches where there is no statutory audit is undertaken, then it can be. But where there is a statutory audit is going on, then statutory auditor need to do this job. Indebtedness. Suppose a loan has been taken from the bank, again fixed deposit. So whether can I take this assignment? No, because indebtedness comes into, if volume 1 of Code of Ethics 2019 has a separate chapter on indebtedness. So it is as of now the existing limit is 1 lakh. So any indebtedness which I have as an auditor beyond 1 lakh is come under the purview. And we are not accepted to take any audit assignment beyond this indebtedness limit. Then performance certificate. Whether performance certificate required from a branch manager, is it required or not? So the performance certificate is such a thing which appears to be internal use of the bank and also apparent that is state report is confidential, correct? So there is no role of ICI or auditor in this regard. So it is purely on the discretion of the bank. So no independence issues involved from an auditor point of view here. Then whether an internal auditor of an entity can communicate with the returning auditor by email? Yes. An incoming auditor of an entity can communicate with the returning auditor in email. But it should also taken into account that whether the email has been reckoned or not, means acknowledgement aaya hai ya nahi aaya hai. And for any other communication, registered post is recommended method of communication with the auditor. So what if we start audit without waiting for the communication or acceptance from the previous auditor? See, there are a lot of cases comes that where the government companies or bank and their branches, the time schedule for the assignment is very stringent. So there is no time to wait for the reply of the outgoing auditor. Their responsibility is that we need to take all steps to communicate with the outgoing auditor, and we should take this audit in the acceptance in his acceptance letter. He should make very clear to the client that his acceptance and appointment is subject to the professional objection, if any, from the previous auditor, and that he can only decide after coming that response from the previous auditor. So it is very clear that he need not to be wait for the acceptance to become, but he has to write clearly in his appointment letter that his appointment can be changed or whatever, subject to the answer came from the previous auditor or other outgoing auditor. Then a very common question is that whether a member in practice can be a director in a cooperative bank. Yes, a member in practice may be a director simpliciter in a cooperative bank, provided he is not in the charge of the executive function, self-interest trait, or or a chartered accountancy firm where he is a partner, or any of the partner of the said firm are not interested in the bank as an auditor. Self-interest rate and self-review rate need to be ascertained and analyzed before taking any such position. So whether a chartered accountant who is appointed as a tax auditor for conducting special audit under Income Tax Act by IT authorities required to communicate with the statutory auditor? Yes. As per council decision, they have to communicate with the tax auditor, and it is required as per the code of ethics. So whether a member can accept appointment as a statutory auditor of certain branches while he is the revenue auditor of different branches of the same bank? No, because again, self-interest rate. He is not permitted to accept the appointment as statutory auditor of certain branches while he is the revenue auditor of different branches. Whether the concurrent auditor of a bank can accept the revenue audit of the same bank? Yes, a concurrent auditor can accept, since both are the nature of managerial function. There is a very, very interesting case law of Arun Kumar Agarwal. This case law is that a chartered accountant, while in service, holding a full-time COP and conducting the bank audit, and he's also having some business. And so after verification of balance sheet, profit and loss account, tax audit report, it has been ascertained that his wife was the proprietor. So what is the consequence? He held guilty of professional misconduct falling under clause 11 of part 1 of first schedule. However, he is not guilty of the professional misconduct with respect to the charge of running business. Clause 1 हमें क्या बोलता है? The engagement in any other occupation without taking institute permission is not allowed, basically, for a COP holder. Again, another one case, S.N. Dasgupta. Here, a CA in a bank audit reported to a shareholder that he has not verified cash on hand, and he had also signed the balance sheet in the anticipation of the receipt of confirmation letter from the bank in respect of the cash said to be lying with them, and failed to report the weakness of the bank financial position. Guilty of professional duties under clause 7 of second schedule of part 1. So with this, I'm at the end of my presentations and my discussions. So it is ethics is something, it is a self-regulatory method, to be very frank. It is a foundation of building trust. Now there's so much emphasis putting on us, pressure to us by the regulator. It is an immense responsibility for us to strengthen the public professions. Now we know that day by day our reporting, our talking, our appearance, our assurance become a public discussions. So it is a immense pressure and responsibility to carry that expectation with us. So with this, I'm concluding my thing. Any question, please ask, and I will happy to give you answer if you have any questions, please.
It was wonderful deliberation from your side, Maitreyee.
Thank you, ma'am.
Even I think there is no question. Yeah, there is no question. So thank you so much, Maitreyee, for this insightful session. You have very well explained about the areas of bank audit where we need to give extra attention, because if it is not done, it can come under ethical issues. So especially certification, documentation, and reports part. So where we generally spend a little less time compared to checking advances and identifying advance, no, NPA part. So what we can conclude from your session is we have to be extra vigilant while performing our duties, especially in bank audit. It is really important because we have to complete the audit in a very short period of time, and we can't bear the non-compliances of our code of ethics. So thank you so much. And friends, ethics, as rightly mentioned and concluded by Maitreyee, that ethics is not just like that one has to learn.
क्वेश्चन है मैम, अपना क्वेश्चन बॉक्स में देखेंगे, क्वेश्चन है.
Okay, yes, मैं देखती हूँ. Questions में, yeah. Can a member providing consultancy services in a bank have any loan account with the same bank? Maitreyee, for you.
Yes, ma'am. Thank you.
Yeah.
Sir, in this scenario, the indefinite issue will come, which I just discussed in the Q&A session. So there is a elaborate discussion in volume 1 of Code of Ethics that if we are in debt to a bank, we cannot take any assignment of that bank because of the self-interest rate arising for the particular assignment. So if it is over 1 lakh, it is better not to take such assignment because it is a violation of Code of Ethics.
Yeah, because at the time of consent, they generally they ask from us if you have adapted to the bank, from the bank or into the bank something.
Yes.
So one questions, I think just a minute, I can see in the chat room from Surya Prakash Agarwal ji, that whether an auditor can accept audit of a branch where his client is having a credit facility. I think yes,
that can be seen. As an auditor, we need to be unbiased, do our work with ethical principle, and we need to apply the fundamental principle of audit. So it is a common scenario that our client may have some facility in the bank, but we need to give our opinion in a unmodified, unbiased basis. So that is major important, that whether, and we should also evaluate whether we are caught in any self-review trait or not. See, if my client is having any account and I am the auditor of that particular bank or branch, there is a circumstances that I may review their arrangement. So in that scenario, I need to understand that how much it is breaching my own quality of the audit and how much it is breaching my interest as an auditor. So breach is come in this scenario. So you need to evaluate the breach, what I just discussed, and accordingly you need to take your decision whether to modify, qualify, end, or accept your.
Yeah, rightly, perfectly said. So of course, stakeholders has reposed tremendous trust in our services, and we have to live up to their expectation.
Yes, ma'am.
So I think now there is no questions. Can you see anything in chat room or question answer box? No.
No, ma'am, I am not able to see anything.
Okay. Okay, one person has said requested to share the PPT. Of course, it will be uploaded on the website, WRC website. Okay, so we can conclude here our today's session. Thank you so much, Maitreyee. Thank you so much.
Thank you, ma'am. Thank you. It is my pleasure to get such an invitation and deliver, because as a member of Ethical Standard Board, I always want that members should be well aware of the different part of Code of Ethics, and we don't want any of our professional brother and sister, our colleagues, should not caught unintentionally to any part of the COE. So it is my duty, and thank you so much to you, to WIRC, and entire participant that they listen to me. So I'm really gratitude to all of you.
Thank you. It's really our pleasure to have you. Thank you. Thank you so much.
Thank you, ma'am. Thank you.